Hello learners, I am CA Rajavardhan from Missions Academy and today I am going to teach you how to revise the topic of consignment super quick. What are you waiting for? Come on, let's get topic of the hour is consignment accounting. In consignment accounting, the goods are sold in a little unique way than how we sell in the normal case. So we call this not normal sale but consignment sale. How different is consignment sale from normal sale? Come on, let's see this. In the case of a normal sale transaction, there would be a seller and there is a buyer. The seller passes the goods to the buyer and buyer pays the money to seller. End of the story. This is how a normal sale transaction. A consignment sale is quite different from this normal. In the consignment sale transaction, there is seller, there is buyer, and between the seller and buyer comes an intermediary. Between the seller and buyer comes an intermediary. The one who's sending the goods is called as consignor, and the one who's buying the goods is a customer. The person who comes here in between is consignee. The one who's receiving the goods, RECE, two E's. So consignee, two E's. And as we call in Kannada, the one who's receiving the goods is the one who's is calling the goods. The one who's is calling the goods will have the word EE in their name. The one is sending the goods is a consignor. He will send the goods, not sell it. He will send the goods, not sell it. And the one who receives the goods will sell it to the customers. And the one who's selling actually doesn't have ownership of these goods, but still sells these goods on behalf of the sender. That is a consignor. And after he sells, the money will not directly go to the owner of the goods. The money has to be collected by this intermediary or agent from the customers. So he sells the goods on behalf of the owner of the goods, is consignor. He will collect the money on behalf of the owner of the goods, that is consignor. The person who stands in between the owner and the customer is consignee. This intermediary is an agent who will sell the goods on behalf of the consignor and collect the money on behalf of the consignor and passes this money to consignor. So the one who's sending the goods here is consignor. This consignor will send the goods, consignee will receive the goods. Consignee will sell the goods and collect the money from customers, send it back to consignor. Now, one who's sending consignor, the one who's receiving consignee. You place this right. What exactly is the relationship between this consignor and consignee? Is this the relationship between employer and employee? Is this the relationship between the wholesaler and retailer? This is a quite unique relationship, and this relationship is called as the relationship that of between a principal and an agent. The principal is consignor who's going to give instructions which are going to be executed by this agent by name consignee. Chalo, let's see that consignor is principal. Consignor is principal, not PAL, ELE, principal. And this principal, consignor, will have the ownership of the goods, but not the possession of them. Possession is effective control. Effective control of these goods is passed to consignee. So I am the owner, but I don't have the possession. Whereas these goods are sent to consignee, the process of sending is not selling. It is only sent, not the ownership, but only the effective control of the goods. The possession of the goods is transferred to consignee. If you have to talk in terms of what is a little high-fi terms, the risk and reward of these goods is still with the consignor. Only the possession or the effective control is transferred, so it can't be regarded as sale. I'm gonna touch upon this topic little later when you go to CA Intermediate and learn Accounting Standard 9 Revenue Recognition. So let's know that part. Will you learn it later? Now, so the ownership of the goods is with consignor. The effective control is passed to consignee. Whenever he sends the goods, if he's selling, you would obviously raise that invoice and then give, isn't it? Here is sending the goods, not selling the goods. He cannot actually send invoice. But along with the goods, consignor has to send a piece of paper which will describe how many units are sent, what is the selling price at which it should be sent, all the details. So this paper is like invoice, but not invoice. Idu invoice tara, but invoice alla. Which looks like invoice. It has all the details like invoice, but it is not invoice. This is what we call as pro forma invoice. What do we call it? Pro forma invoice. Pro forma is format. So this has format of invoice, details like invoice, serves like invoice, but it is not invoice because there is no sale in here. Get it? Okay. So consigner, the owner of the goods, transfers the effective control position of the goods. Along with that, he'll also give pro forma invoice. Now, pro forma invoice is sent with goods. You understood it. Now let's see what exactly will be there in the document pro forma invoice. Chalo, zoom into it. Pro forma. What do we have in pro forma invoice? What we have in pro forma invoice is details of goods sent. Quite obviously, he has to mention how many units are sent along with the value of them. And consigner is principal. He dictates the terms here. So consigner should also tell at what rate should consignee sell these goods. He will tell, hey consignee, sell these goods at 120 rupees per unit. He doesn't have to shout it out loud. He'll put it on this paper called as pro forma invoice. So the first point in this is goods sent on consignment. Second point is expected selling price at which the consignee is supposed to sell these goods sent by consignor. Correct? The third point will be commission. Okay, I am giving these goods to you. Okay, you will sell these goods. But why? Why would you sell it? I'll give you some reward. And I don't have to tell that your reward will be magical. It will be imaginary. I'll tell you later. No, you can't do that. You have to tell him upfront as to how much is the commission he will be entitled to for sale of this. It has to be pre-agreed, written upon, and duly signed by both. So, in the pro forma invoice, consignor will state what is the commission that the consignee will be entitled to for sale of this good. Got it? And the next point is now consignor is sending this along with pro forma invoice. Consignee will receive these goods, sell it to customer. After he sells it to customer and collects the money from customers, that money doesn't belong to him. Money does not belong to consignee. Consignee has to pass this money back to consignor. Consignee has to pay the money what he collected from customers back to consignor. When he's sending the money, along with the money, he should also send one document. Consignee has to send one document. Now the question is it sales to consignee? Answer is no, it is not. Why? Consignee is not the owner of the book. Consignee is a mere agent. Consignee is a mere agent. Consignee cannot call it sales because to consignee it is not his goods. He doesn't have ownership. What he has is only possession. This is actually sale to consignor, but the goods are sold by consignee. So consignee is the agent who doesn't have the ownership but had the effective control or possession, who has executed the instructions given to him or her by consignor. And once consignee executes these instructions, he is reporting back to consignor as to what did he do, at what rate did he sell, all these details. So consignee will prepare a document which will comprise details of all the sales. He sold goods, no, not of, definitely not his sales of the consignor, but he made the sales. He will keep a record of all the sale transactions. But this record, what he maintains, cannot be called as sales account. Why? He doesn't have effective control. If you would have had effective control or position, you would have called it his sales. But this is not wholesaler retailer relationship. This is principal and agent relationship. So it is not sales to him. He cannot maintain sales account. So he'll prepare a document which is like a sales account but not sales. ಇದು ಸೇಲ್ಸ್ ಅಕೌಂಟ್ ತರ ಆದರೆ ಸೇಲ್ಸ್ ಅಕೌಂಟ್ ಅಲ್ಲ. What is this? This is called as account sales. This document which is sent by consignee to consignor, which will comprise all the details of sales, is account sales. What is it? Account sales. Have a look here. This, my friends, is account sales. This is not normal sales. Now, let's see in detail as to what will be recorded in accounts. Now, you guys tell me, what will be recorded in account sales? Consignee has executed the instruction of selling goods. He'll keep record of units sold. He'll keep record of units sold. How many units did he sell? And next thing is, at what rate he sell these units? What rate did he sell these units? And To sell this, what expense did he incur and how much is the commission that is entitled to will also be part of this. Expense incurred by consignee to sell the goods. Expense incurred by consignee to sell the goods. And it will also include commission income to consignee. Commission income to consignee. How much is the commission income to the consignee for the sale of these goods? Got it? Fantastic. And finally, you will write what is the number of notes sent. 2000 rupees notes into 20, 500 notes into 20. So the description of the amount sent. Yeah, even if he has done direct deposit to bank, he'll tell the amount that is deposited. Got it? So this will be the details comprised in our account. So by this, you people have understood how this entire schema of our consignment work. But let's talk a little more about money. Now, money involved with regard to consignee is commission. The rest of the part is simple. He'll collect so much cash from customers, he'll pass on so much cash to consignor. Let's talk in detail about the commission here. Now, the consignee, what we need to know is the agent. He will receive the goods, he will sell the goods, he will collect the money, he will not give the money and then ask the consignor, please give me my commission. No. Consignee, what he does is, he will collect the goods, he will sell the goods. Out of the sale consideration received, out of the sale consideration received, he will retain his portion of commission. He will retain his portion of commission. And only the balance will be paid back to. You getting it? Like your concept of deduction at source. You will deduct the what is the commission at source and only the balance will be paid back to. Now, what is this commission? How can it be computed? What are the forms of it? Is what we're going to learn. Commission is basically of three types. How many types? Three types. Number one, ordinary commission. Number two, creditor commission. Number three, it's called as overriding commission. These are the three forms of commission which is discussed under the topic of consignment. Questions on the examination have come on this topic. We need to do this topic with little bit of diligence because either they can ask a separate question on exclusive computation of commission or they can ask a big question in which computation of commission is a small part. Great. Let's see ordinary commission. Ordinary commission is the commission given by the consignor to the consignee for selling goods. Remember very clearly, this might sound funny but true. Commission is given by consignor to consignee for goods sold, not for goods sent. As a consignor, if I send 1000 units to consignee, I won't give commission on 1000 units. If consignee will sell 1000 units, I'll give commission. To make it a little better, if I'm sending 1000 units, but he sells only 800 units, commission is there only on 800, not on 1000. Logical, isn't it? The commission is given on the goods sent. Consignee will say, keep sending, send. Stop, I'll buy one more good. You keep sending goods. Why? Commission is received for every unit received. No? That's not how it works. Logical, isn't it? The commission should be computed on the goods sold, not on goods sent on consignee. Ordinary commission can be computed either on per unit basis or on percentage basis. Per unit basis means for each unit sold by consignee will get commission. For every unit sold, we'll get 10 rupees commission. Possible? I say 1 unit, I get 10 rupees commission. I sell 2 units, I'll get 20 rupees commission. Or we can decide percentage basis. For every unit sold, I will get 10% commission. This is because let's say the consignor's cost is 100. Consignor sends the goods to me at 120 and I'm supposed to sell these units. For each unit I sold, I got 10 rupees. Logical. 100 rupees cost, he sends it to me. I sell it at 120. I get 10 rupees commission. I will give him 110 rupees. So he makes 10 rupees profit. I makes 10 rupees commission. Very much what you say, assumptive scenario. It's not a realistic scenario, just an assumption. Now, if in case I have the goods with me, I have a customer who's willing to pay a higher price for it, I convince the customer and sell it to him for 150. I sold it at a higher rate. When I sell that unit at 150, I still get 10 rupees commission. And I give 140 to him. He is making 30 rupees profit. So I am not being appreciated for my efforts here. I've been paid only 10 rupees. Whether I sell the goods at 110 or 120 or 150. So I would have no motivation to sell it at higher price. So to motivate me, consigner might say, okay, I give you 10%. So if I sell it for 120, I get 12 rupees commission. If I sell it at 150, I'll get 15 rupees commission. If I sell it at 200, I'll get 20 rupees commission. That's a good enough motivation. So keeping this as basis, ordinary commission can be computed. It is computed for the goods sold. This can be either on per unit basis or it can be on percentage basis. If it is per unit basis, we do commission is equal to number of units sold multiplied by commission. And if this is on percentage basis, it is commission is equal to units sold multiplied by selling price per unit. That is sale value of units multiplied by commission percent. Sales in rupees multiplied by commission percent. This would give me percentage. And this is how we compute ordinary. Now, whether it is per unit or percentage is left to the discretion of consignor and consignor. They can agree upon it and mention it in their consignment. That is pro forma input. And this would be provided to us in the question. And the way they provide is how we compute. We can't decide whether it is per unit or. This data will be told to us in the question. All we need to do is remember to compute it on goods sold and not goods sent. Let's go to the next part. After this, we have Del Creditor Commission. What is the next one? Del Creditor Commission. Now, this is a very interesting story. Let's say I am consignee. I am consignee. I want to become rich. I want to make more money. How do I make more money? How do I become rich? Two ways. One, rob a bank, which is not a legal thing to do. Second one, sell more goods. Obviously, I should sell more goods. Why? For every unit I sell, I'm getting 10% as commission. Or for every unit I sell, I'm getting 10 rupees as commission. I sell more units so that I get more commission. You're getting it? I sell more units so that I'll get more commission. But there is always a point after which you can't sell. For instance, let's say the consignment is for television or refrigerator. For one person, potentially I can sell one TV or max two TVs. To one house, I can sell only one refrigerator. I can't sell more than that. I have not come across people who have two refrigerators at home. Am I getting it? So it's a saturated market. I can't sell too many products. Or it is not easy to sell too many products. I hope you agree with this. I can't sell too many products. There is a limit on how many products I can be selling. So what do I do? What do I do? I think. I come out with a beautiful idea. I say, I am going to rule this market. I'm going to sell it. Crazily, I'm going to sell it. How? I will call all my customers or potential customers and then say, are you guys willing to buy? They will say no. Are you guys willing to take the goods free? They will say yes. But can I give it free? No, no, no. I have to give the lekachara account to my consignor. I have to give him money. But I will tell all my customers, I'm going to give you guys goods free. Will they be willing to take? They'll take it. They'll call their neighbors also and then take the goods. Get it? So they'll all take the goods free, free, free. I give goods free. I usually sell 100 units in a month, but this time I sold 1000 units in a month. Actually, I gave 1000 units free in the month. And at the end of the month, I prepare account sales. In the account sales, I'll say sold 1000 units and send that account sales to my consignor. Consignors will say, hey, amazing man, 1000 units, amazing sale. But I think you forgot to send money. I will say, no, 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 I didn't send money because I sold goods. No, those are all credit sales. So I didn't collect money. Consignor will like, oh, credit sales, fine, fine. When you do such big transactions, no, it has to happen on credit. It's okay. You pay me the money next month after you collect. I will say, yes, yes, but my commission and my expenses are actually due. So, oh, don't worry, I'll give you so much cash right now. And the consignor will give me that cash. You know what happened? I sold the goods on credit. I sold the goods on credit. Is what I told my consignor. And I recovered my expenses and commission from consignor in cash. Or I might have made part cash sale. From that cash sale, I retained the entire cash sale towards my commission and expense. And credit sale money, though I didn't collect it. Next month, my consignor will call me and ask, boss, where is the money? I will say that's a sad story. All these people who took goods on credit didn't pay the money back. Bad debts. So my consignor will like, oh shit. Like, no. It's okay, you don't cry. Business may all this will happen. I will write off as bad debts. Consignor will write it off as because understand the fact here. Consignor is the principal. Consignor should bear all the expenses. Consignee will not bear all the expenses. Now, consignee is happy. Why? He could have never sold 1,000 units. Now he made commission on 1,000 units. And he's given away goods free. This month he gave 1,000 units free. Next month he'll give 10,000 units free. And all 10,000 units say bad debts. Consignor has to write 10,000 units as bad. Nice business idea, no? So think from consignor's perspective. Consignor is losing very badly. Am I right? Firstly, the goods are given away free, because of which he will not recover a single penny towards sales. Next thing, he is in fact giving commission to consignee for these goods, who gave the goods away as free. More importantly, this is also spoiling his market. How? Let me say. Consignee has given goods to somebody free. You know what that one who's receiving free doing? That one who's receiving the goods free is selling those goods back in the market. Let's say I am consignor. My cost of the goods is 100. I am from the city of Bangalore. I will sell the goods in Bangalore, but I have a consignee in Hyderabad, Chennai, Mangalore, what to say, in several other cities, Mumbai, Pune. So I will give it to them. He will sell in that city then. I gave this 100 rupees costing goods to him, asking him to sell it at 120. He told he sold it at 120, but bad debts. So now what am I doing? I am writing 120 rupees bad debts, expense. The one to whom he gave goods at 120 rupees worth goods free, that person is selling the goods at 50 rupees in the market. One of my customer was buying goods from me in Bangalore. He's now buying goods from my consignee's customer. Why? He's giving it away at 50 rupees. So I am losing my direct customer. I'm losing my goods. I'm paying commission. Three ways I'm getting spoiled. Oh God. One fine day, consignor is out in a party and he meets one guy who's very happy and then celebrating. Consignor is upset. Consignor will look at him and then ask, what business do you do? How much money you make? Oh, I do an amazing business. It's a double-sided business. I get goods free, I sell and make profit. Like, wow. Tell me also, no, let me also do. Then that friend whom we met at the party will show the goods and then say, this is the goods. I get it for free from my friend and I sell it to people for 50 rupees. Consignor is shocked. He look at it like, oh my God, this is my goods. I sell this. How did you get it from? From whom did you get it? One at the party will disclose the name of consignor. Ah, now the time has come for consignor to sit and cry, wipe his tears, go back and confront consignee. Consignor will call consignee for a meeting or a cup of tea or coffee. And then he says, boss, you want more commission. You ask me for commission. You don't give goods free to people and charge me commission and make me write bad debts. What does the consignor say? Consignor tells to consignee, you want commission? You ask me for more commission. I will give it to you. Don't give away goods for free to people and charge me commission on that and also make me write it as bad. And such a commission which is paid by consignor to consignee is del creditor commission. The point of this commission is very simple. If consignor pays this commission to consignee, consignee will bear the risk of bad debts. Consignee will bear the risk of bad debts. Meaning, till now, consignor being principal, if there is any bad debt expense, it will be borne by consignor. If consignor pays del creditor commission to consignee, if there is any bad debts, it will be borne by consignee. Consignor will say, 1,000 units sold. I want cash for 1,000 units. The customer gives the money, collect it from the customer and give it. If the customer doesn't give the money, put it from your pocket and give it to me. If not, I am going to cut your commission. Consignor will have the right. Consignor will, what to say, ensure that he puts the right, and then consignor will collect every rupee for the sales. irrespective of the fact whether the consignee has collected this money from the customer or not. And that's what we call as del creditor commission. That's what we call as del creditor commission. Have a look. Commission for bearing loss on bad debt. It is usually on consignor. It is transferred to consign. Very good. This is computed on per or it can be on percentage basis. If it is per unit basis, it is unit sold into commission per unit. If it is percentage basis, it is sales in rupees into commission percent. But there is an interesting question. I'll ask this question to you. You write about your answer and then also tell you what is it. Should del creditor commission be computed on total sales or credit sales or cash sales? Let me repeat my question. Del creditor commission, should it be computed on total sales? Should be computed on credit sales? Should be computed on cash sales? Think. I know all of you would say, sir, credit sales. Answer is absolutely wrong. It is not credit sales. If you would have thought the answer is total sales, you are right. Del creditor commission should be computed on total sales and not credit. You might ask the reason why. Very simple. If you compute del creditor commission only on credit sales and not on total sales, you know what the consignee will do? Consignee is getting commission of 100 rupees per unit sold or 10 rupees per unit sold. On del creditor commission of additional 2 rupees if the credit sales are there. Why would he sell the units at 10 rupees? Oh, sorry, why would he want to collect 10 rupees commission? Would want to collect 12 rupees commission. So every customer who comes and then buys the goods. If the customer is about to pay money, consignee will say, no, don't pay, pay tomorrow. If you pay today, it will become cash sale. I'll get only 10% commission. You pay tomorrow, I'll get 12 rupees commission. Or he might collect the commission. He might collect the money, but he might still record it as credit sales. This will ensure that he will get higher commission. But the point here is the money will not go into the hands of the consignor instantly. It will get delayed. It will affect the entire working capital management. So he doesn't want to, what to say, let this del creditor commission concept backfire him. So consignor will give del creditor commission on total sales and not exclusively on credit. So always remember, whenever we compute del creditor commission, we compute on total sales and not exclusively credit sales unless specifically mentioned. And the last point is, if del creditor commission is paid, risk of bad debts is borne by consignee, not consignor. Great. So we're done with del creditor commission. Next, let's go to overeating commission, the last type of commission. Overeating commission is the commission which is paid over and above ordinary and del creditor. This commission is paid by consignor to consignee because of the super performance of the consignee. Maybe consignee is selling the goods at a higher, what to say, profit, higher margin or higher selling price. I told you previously, cost to the consignor is 100. He is asking the consignor to sell at 120. If he sells at 120, 10 rupees commission to consignee, 10 rupees profit to consignee. What if consignee sells the goods at 150? Consignee will still get 10 rupees commission and remaining money will go to him. Even if you keep 10% as margin, consignee will get 15 rupees. Consignee will get 135. 25 rupees profit to 15 rupees. Or 35 and 15 actually. So not fair. Not fair because for every 100 rupees I collect from the customer, if I am getting only 1 rupee or 10 rupees, I will not be very excited. So for the agreed price, it will be fixed amount. If you select a price more than that, for that extra performance, you will get higher rate of commission. That's what we call as overriding commission. So overriding commission is the commission paid by consignor to consignee for the sale made by the consignee at a higher price. Have a look. Consignment sales at higher price. Very good. So this is paid on the surplus. Let's say the actual selling price you told me to sell it at 120. I sold it at 150. So 150 is the actual selling price. 120 is the expected selling price. If I deduct 30 rupees is the excess selling price. On that 30, I'll get overriding commission. Overriding commission can be 50%, 40%, 30%. It can be quite high. It can be quite high than the normal commission. This, my friends, is overriding commission. So I hope you understood all the commissions. Let's quickly understand few thumb rules what I made you just now understand about commission. The first point with regard to commission. Oh, sorry. The first point that I want you to remember with regard to commission is there. But I would want to explain couple of other things to you. This is with regard to expense. Now listen. Commission is also an expense. Let's understand expense and then go. For movement of goods from consignor's place to consignee's place, the goods will not just go like that. No, it's like you pack all the goods and then you tell goods go to consignee's place. Goods won't go. You need to pack them, you need to load them, you need to pay for freight, carriage, octroi, you need to pay for transportation, you need to pay for transit insurance, and again once it comes there, you need to pay for unpacking, unloading, carriage, go down rent, go down electricity, watchman's salary, lot of other expenses will be there. And later when those goods are sold to customer, again delivery to customer's place, correct? Or not? There will be plenty of expenses incurred for movement of goods. And all of these expenses, how do we treat them? That's what we're trying to learn. These expenses, whether they're incurred by consignor or they're incurred by consignee, these have to be borne by consignor. Remember the rule? All expenses, whether paid by consignor or paid by consignee, has to be borne by consignor. Reason being, consignor is the principal. Consignor is the owner. Consignor gets the profit. Consignee is after all agent. Consignee doesn't have ownership. Consignee has only possession. Consignee gets only commission. Consignee will not bear this expense. Expense, whether it is incurred by consignor or even if it is incurred by consignee, these expenses should be borne by consignor only. Got it? Fantastic. Then the next point, second point that you need to note is expenses are paid by, whether paid by consignor or paid by consignee, borne by consignee. Now, the next point is these expenses can be categorized into two. One is selling expense, other one is non-selling expense. We'll also call it recurring and non-recurring. Now, what is selling expense? What is non-selling? Let me tell you. Journey of the goods starts from the godown of the consignor, and the goods will go all the way till customer's place. In this journey, we have one pit stop. That pit stop is go down of consignee. What is it? What is the pit stop? Go down of consignee. Till the time goods reaches consignees go down. Till the time goods reaches consignees go down. Any expense incurred, any expense incurred is non-selling expense. Any expense incurred till the time the goods will reach consignees go down is non-selling. Once the goods reach consignees go down, after that any expense incurred is selling expense. Let me repeat. Any expense incurred till the time goods reach consignees go down is non-selling expense. Expense incurred after goods reach consignees go down is selling expense. Selling expense is in fact called recurring expense. Non-selling expense is called non-recurring. And the point here is all expenses, recurring, non-recurring, selling, non-selling, both are considered in computation of profit. If you have to compute profit on consignment, we are going to consider both selling as well as non-selling, recurring as well as non-recurring expense. Recurring, non-recurring expenses both are reimbursed by consignment. Recurring, non-recurring expenses both are considered in computation. Now you might wonder, sir, then why do we bifurcate these expenses as recurring, non-recurring? Why? Think. I'll answer. Ah, both the expenses are to be considered in computation of profit. Both the expenses are to be considered in computation of profit. Both the expenses are to be borne by consignor. But if you are trying to value the consignment stock, you're trying to value consignment inventory or consignment stock, you should only consider non-selling expense. Meaning, any expense incurred after the goods will reach consignees go down will not be included in the value of goods. Any expense incurred after the goods reach consignees go down will not be included in the value of it. Let's say I've sent 1000 units. Consignee has received 1000 units. Consignee has sold 800 units and he has 200 units remaining in his stock. This 200 units remaining unsold is our closing stock. We should write it in consignment account. We should write it in balance sheet, in my books of accounts, in consignor's books. For the computation of value of those 200 units, or computing the value of the 200 units, I should include only the cost incurred or expense incurred till the time the goods will reach consignees. After the goods reach consignees go down, any expense incurred like go down rent should not be included in the value of this 200 units remaining unsold with consignee. I'll make you write this. See, this is how it goes. Only non-selling expenses or non-recurring expenses are considered in valuation of unsold inventory with consignee. Got it? This is with regard to expenses. Now let's go back and discuss some important points that you need to remember with regard to commission. Got it? Commission. Rule number 4. Consignee is entitled to commission on goods sold and not goods sent on consignment. Told you this before. Second point. Bad debts are to be borne by consignee when del creditor commission is paid by consignee. If del creditor commission is not paid, bad debts will be borne by consignor. Then all the expense, this entire commission will be debited to P&L account. Sorry, in our consignment account. Then the next point that I wanted to tell you is, unless specifically mentioned, del creditor commission is to be computed on total sales. Del creditor commission is computed on total sales, not exclusively on credit. And overriding commission is the last point. It is always computed on surplus. That is actual selling price minus expected selling price. It's not given on total sales. It's given only on surplus. This is the points that you should remember when it comes to commission. Then let's discuss how to treat loss of goods. Now, I told you that 1000 units are sent. It doesn't mean all the 1000 units are received by consignee. Or let's say he received 1000 units. He kept 1000 units in the godown. It need not so happen that all the 1000 units is what he sells. Some units might get damaged, might get lost. How do we treat this? To treat loss of goods, we need to understand that this loss of goods, either in transit or at godown, can be categorized into two broad classes. Number one, normal sale. Number two, abnormal. They both are not same. It is different. We are not same, bro. Normal sale and abnormal sale are different. Normal loss and abnormal loss are different. Sorry, I use the word sale. It is loss. Loss of goods can be categorized into two. One is normal loss, other one is abnormal. Now the question is, what is normal loss? What is abnormal? Normal loss is unavoidable loss. No matter what you do, you can't avoid it. It is unavoidable loss. You can't mitigate it. No matter what steps you take, this loss is bound to happen. This loss is acceptable. This loss is unavoidable. This is the loss for which you can't do kiss the bucking. Just have to bear this. However, abnormal loss is not normal. It is avoidable with right steps, with right quality controls, with specific change in the process. You can control, you can mitigate, you can avoid this loss. You get it? Normal loss is unavoidable loss. Can't stop it. Yeah, can't do anything to mitigate this. On the other hand, abnormal loss is avoidable loss. Can be mitigated by timely and precautionary measures. Get it? Now, for this normal loss and abnormal loss, the accounting treatment is different. Accounting treatment is different. How do we do it? Let's see. Per unit cost after normal loss will increase, whereas per unit cost after abnormal loss will not increase. You'll be like, how come? I'll show it to you with the example later. Whenever we bought 100 units at rupees 1000, one unit got lost or damaged. We have only 99 units left. That 1000 rupees will be cost of 99 units now. So 100 units cost was 1000 because one unit is normal loss. 1000 rupees the cost of 99 units. That is normal loss. However, if it is abnormal loss, we will reduce the cost also and then per unit cost will not increase. I'll show this to you with the help of an example. I'll show this to you with the help of an example. Stay on hold for some. So remember that whenever there is normal loss, cost of good units will increase. Whenever there is abnormal loss, there is not going to be any change. There's not going to be any change. Next one. With regard to normal loss, there is no journal entry. It is adjusted in the price of the good units. It will lead to increase in the price of good. However, with regard to abnormal loss, there is journal entry. We will transfer this to P&L. It will be debited to P&L account as loss. It will be debited to P&L account. We will also see the accounting entries little. Just have to put. Then we have the third one, adjustment entry. We are going to do adjustment for normal loss, but we are going to adjust it only in units cost. Only number of units will reduce, total value won't reduce. However, when we talk about abnormal loss, there is going to be decrease in number of units and there is also going to be decrease in total value of the. Yeah, we are going to not adjust only in units, but we are going to write journal entry by adjusting. You get it? Let's take an example. Now, consignor has sent 100 kgs of tomatoes at rupees 10 per kg. Consignor spent 200 rupees on transportation. Consignee received only 99 kg. Sent is 100, received is 99. So 1 kg is lost. Sent is 100, received is 99. So 1 kg is lost. That 1 kg what is lost is normal loss. Let's see how the accounting will be for this. Let us start with units column, rate per unit column and amount column. Like this. I'll write goods sent on consignment 100 units, 10 rupees per unit. I'll add the consignor's expense. It will come to 1200. 1200 rupees is for 100 units. We'll make the rate 12. How did I get it? 1200 divided by 100, that is 12. 1 unit is lost. I will decrease only in the units column, making number of units 99. And the value will be straight imported 1200. This will not reduce. I'll only reduce number of units from 100 to 99. My value will remain same 1200. So 1200 rupees, which was the value for 100 units, will now be 1200 rupees value for 99 units. And when you do 1200 divided by 99, my rate per unit will become 12.12121212. So if you observe, previously the rate of good units was 12, it has reduced from 12 to 12.1. So whenever there is normal loss, it is going to increase my per unit cost. Have a look here. I told the same thing. Normal loss will increase the cost per unit. It will increase the cost per food unit. Now, let us see the example with regard to abnormal. Shall we see the example with regard to abnormal loss? Let's say consignor sent 100 kgs of tomatoes at rupees 10 per kg. Consignor sent 100 kgs of tomatoes at rupees 10 per kg. Consignor spent rupees 200 on transportation and consignee received only 99. And let's say that 1 kg which is lost is not normal loss. Let us say that when this 1 kg what is lost is abnormal loss. Is it abnormal loss? How will it go like? We will write 100 kgs is sent at rupees 10. It is 1000 rupees. I will add consignor's expense of 200. The value will come to 1200 for 100 kgs. This is 1200 to 100, 12 rupees per kg. Now, I am going to deduct abnormal loss. Abnormal loss is 1 kg and the rate for this 1 kg of rupees 12 is 12 rupees. I am going to deduct 1 kg from 100, making it 99 kgs the stock received by consignee, and I'll multiply it by 12 to arrive at the amount as 1188. This is the difference between normal. If in case this was normal loss, I would have written 1 here. I would not have adjusted my amount. It would have become 99 units but 1200. Now, if it is abnormal loss, I'll write 1 unit here. I'll also write 12 rupees now. This 12 rupees of abnormal loss will go to my P&L account debit. In the case of normal loss, we will not do it. The cost of the bad units will be borne by the good unit. Will be borne by the good unit. Got it? This is with regard to normal loss. Let's quickly see what are the accounting entries. Sorry, what is the rules that we should remember with regard to normal. Rule number one is normal loss is to be adjusted only in units column. So cost per unit will increase when there is normal. Normal loss should be adjusted only in units column. So because of this, cost per unit will increase in the case of normal loss is only adjusted. There is going to be no journal entry for. On the other hand, abnormal loss will be adjusted in P&L account. Got it? Cost per unit will remain unchanged when there is abnormal loss. Whereas cost per unit will increase in the case of normal loss. Are you guys getting it? This is with regard to rules. Now you understood the entire overall view of consignment. And stay tuned. In the next video, I am going to help you understand accounting for consignment. What journal entries should be passed in the books of consigner, what journal entries should be passed in the books of consignee, how to prepare ledger accounts in the books of consigner, how to prepare ledger accounts in the books of consignee, and we also have an amazing topic of load price. How to deal if the consignor sends the goods to consignee not at cost price but at an inflated higher price. That's what we are going to see in the next episode. Till then, remember life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys either stop learning something or stop having fun. Trust me, you might start struggling because you might be in a battle. So the thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for all of you. Are we in the game? See you all in the next one. Study well and stay in the game. Bye guys.